Well, joining us now to share his commentary on the day's market performance is Zwelakhe Mnguni from Benguela Global Fund Managers. Thank you so much for your time, Zwelakhe. Not a lot of news and market and I guess company news that we are digesting at midday on a Friday. A pretty quiet one after such a busy week. But we did actually get an economic data print coming out from the UK showing that the economy did not grow in July. And this is actually after an expansion of 0.4% in June. Could the UK be facing a downward slope in the economy?
Yeah, thank you, Zinati. I do think that the UK is facing some challenges, and I don't see how they are going to be able to get out of this situation. I think they've tried some government spending to try and boost the economy, but it looks like the momentum remains weak in the UK economy. So the flat number, I think that number would precede a decline. I think the UK would probably get into a recession, in my view. I think their consumers are not strong. I think their private sector is struggling to fit into the bigger picture of the EU after the breakup. I think they need to come up with a more clear and deliberate strategy around how they're going to drive growth, and I don't see them having that at this stage.
Yeah, this is definitely going to provide a lot of food for thought for the Bank of England that does meet next week, but also for Rachel Reeves as she prepares the autumn budget there in November. And actually, yeah, we've seen a lot of commentary around the struggling UK economy also from a lot of companies listed on the JSE that have exposure to the UK. Well, let's get into monetary policy. The road to the Fed's September meeting is leading us closer and closer to the big event. Ahead of that, Zwelakhe, where's investor focus in terms of what could influence the central bank, particularly in terms of the data that we got this week?
Look, I think the data is diverging. On one side, you're getting inflation that looks like it's ticking back up, and you get unemployment that is ticking down. In other words, we are seeing increasing unemployment. So they've got a dual mandate, and I mean they have to battle between the two. But I think the odds are that they would have to favor supporting full employment in this particular case. It might be one rate cut, in my view, currently, and I think it's almost guaranteed in the sense that there's been so much evidence of a slowdown in the US economy. So they might have to try and be a bit early cut and then wait and see for the data. But if they just do nothing, I think that they would have like a big pushback from the market. I think markets would react negatively. I think we'll get a lot of noise from the Trump administration, not that it should matter.
Yeah, it's quite interesting at this point that it feels like you can't tackle two things at once, and really the major focus then here has to be the labor market rather than what is happening with inflation. Well, talking about inflation and monetary policy, here in South Africa, next week is also a big week because we have the August inflation print coming out. And of course, we did have for July that actually ticking up. And then obviously the day after we get that data point, we do have the SARB coming out with its latest interest rate decision. What are the expectations there?
My expectation is that they should cut. I think the inflation uptick is not big enough to actually lead to them missing their target. I mean, it's well within their target, but also if you look at where the rand is today, I mean, that gives a very nice underwriting to the inflation wave. So whatever we import, the rand is stronger, so we would benefit from that. And the things that we export, like gold and platinum, have been rallying a bit. So that would be positive at the current account deficit. So that should be supportive of a low inflation. I know that the consumer is not well, but the rate cuts, the last two rate cuts, should have actually alleviated a bit of pressure, and we should be looking at a slightly more positive momentum in the economy. So I would expect that they would cut.
We're talking about positive momentum. We've actually gotten a lot of that in global tech. In the US earlier this week, we saw the shares of Oracle surging almost 40% after they released their earnings. And then today we've seen that Alibaba and Baidu in China, their shares have also propped up because they're using their own chips to test out artificial intelligence models. And I'm wondering just at this point, and I mean, obviously, because we've seen the NASDAQ and the S&P 500 also reaching record highs this week, is tech just a good place to be in, regardless of geography at this point?
Look, I think the Asian tech lagged behind for quite some time, and I think it was because of the tariffs and all the blockages of trade in high power chips. I think the announcement that we will be seeing Alibaba and their peers actually coming up with or using their own chips, I think that is significant. I think it reinforces the decoupling theme that has been happening, where China has been trying to be less dependent on US technologies. We saw that Huawei also came up with an operating system where they're trying to move away from a Microsoft platform. So that could be the next big wave of in the technology sector. We might see that the technology sector in Asia would basically perform better going forward. But in the US, they are at the application stage. You are seeing that the likes of Oracle, they're now talking about the implementations that they will be doing to their customer platforms, partnership with NVIDIA. So that was a significant jump in terms of the price. I do think that the market is overreacting on Oracle.
Okay.
I think the prospects are great, but I do think that it is a bit of an overreaction. So we might see that share price pulling back a bit.
All right. Well, Zwelakhe, before we get to your stock pick, let's take a moment to touch on which stocks have found favor with your peers.
JP Morgan is a case of preparing for the worst and hoping for the best as far as I'm concerned. They've been very conservative in providing for if things go bad. And I think they're probably the best run bank in America, certainly. And they've got the track record to prove it, to improve it. So what I like about it is that they're quite defensive if we do see stress from inflation. You know, if we're going to stagflation in the Americas, they will, to a certain extent, have provided for that. And hopefully one gets some protection from that side. But if things go well, JP Morgan will do, banks will do well, JP Morgan will do exceptionally well because of their management.
I think that their results were very good. Earnings up 10%, and that's despite increasing their provision for what in the UK there's this motor investigation into commissions, and there's going to be some redress, so they've provided for that. But I think that the outlook statement was really what got the market excited. They're saying that earnings are going to grow mid-teens. So if you adjust for the provision in the base, it's sort of at least double-digit growth. And also saying that the advances or the lending environment is picking up in South Africa. Secured lending in more so than unsecured, which is actually good for our entire banking sector. Also that the UK business, despite really tough macro, they grew their lending book 8% there. Earnings grew 2% in a very difficult environment. So I think that the bank is really well placed, and outlook statement is positive. And I know that the foreigners love to come in for first rand. So I think once the FCA redress system is announced later this year, once that's out the way, I think that there'll be some real interest in first rand again, and the share price will do well.
Zwelakhe, it's very interesting that both of the gentlemen chose banks, US Bank, JP Morgan, and South African Bank First Rand. Is the banking sector just a safe place to be in?
Look, I think the banking sector in South Africa in particular, I think has lagged significantly behind the global banks. But we did see a bit of a catch up in the last 12 months. However, I think when I look at the numbers that came through from First Rand, they were fantastic, I mean, given the environment. But I do have a little concern that they seem to be ceding their crown on innovation, and they haven't come up with any major innovations in their banking products that are visible. So my concern is that the future growth may be challenged primarily because of the economic environment, but secondly, that you might see the likes of Capitec challenging them harder in some of their areas of innovation. So it is cheap, it is a good bank, it's a well-run bank, but I do think that they might not be able to maintain a 20% ROE going forward.
All right. Well, let's get into your stock pick for today. Where are you seeing value?
I'm thinking of Anglo American. I think it's the recent announcement between them and Tech Resources will switch their portfolio to be more biased towards copper, and I think one sees copper as a commodity that's got better prospects on balance of probabilities. The whole data center build, the electrification of cars is going to require a lot of copper, and they are facing in that direction, or they are positioning their portfolio in that direction to be able to capture some of that. I think it is a fantastic positioning relative to, for example, if I look at BHP, which still has iron ore being a dominant factor, which I do not believe has got great prospects going forward, primarily because in the past what supported iron ore's strong rally was China's build program, infrastructure development, particularly the property sector as well. So we are not going to see that for a while because the property sector in China is in trouble. So you'd want anything that skews slightly away from the iron ore or the bulks. So I believe that Anglo Americans post the merger would be a well-positioned player and would have great prospects going forward.
All right. Well, thank you so much for your time and for your insights on what has moved investors' money this morning and at midday. Zwelakhe, that was Zwelakhe Mnguni from Benguela Global Fund Managers.